U.S. inflation hit four-decade high in March. Consumer Price Index rose 8.5% from a year earlier. Watch what happens to gold.
Welcome to Silver Heist. Thank you to our returning subscribers and guests. We are a channel that likes to hold physical gold and silver. To support my creation, please subscribe.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally.
Let's check out this Bloomberg headline from April 12, 2022. U.S. inflation quickens to 8.5%, ratcheting up pressure on the Fed. If you like saving your wealth in the form of gold and or silver and hearing the news that impacts its pricing, please give this video a thumbs up. Consumer prices rose 1.2% from February, half due to gasoline. Food, shelter, and airfares stay elevated in broad-based gain. So U.S. consumer prices rose in March by the most since late 1981, underscoring the painfully high cost of living and reinforcing pressure on the Federal Reserve to raise interest rates even more aggressively. The Consumer Price Index increased 8.5% from a year earlier, following a 7.9% annual gain in February, Labor Department data showed Tuesday. The widely followed inflation gauge rose 1.2% from a month earlier, the biggest gain since 2005. Gasoline costs drove half of the monthly increase, while food was also a sizable contributor, as Americans paid more for vegetables, meats, and dairy products. Excluding volatile food and energy components, so-called core prices increased 0.3% from a month earlier and 6.5% from a year ago, due in part to the biggest drop in used vehicle prices since 1969 and a deceleration in price growth in other merchandise categories. The March CPI reading represents what many economists expect to be the peak of the current inflationary period, capturing the impact of soaring food and energy prices after Russia's invasion of Ukraine. While the Fed has opened the door for a half percentage point increase in interest rates, inflation isn't likely to recede to the central bank's 2% goal anytime soon, especially given the war, COVID-19 lockdowns in China, and greater demand for services like travel. Americans are also struggling because wages aren't keeping up with inflation. Even as employers boost pay to attract and retain workers, inflation-adjusted average hourly earnings dropped 2.7% in March from a year earlier, the 12th straight decline. A very similar article in the Wall Street Journal today, U.S. inflation hit four-decade high in March. They go on to say that there's an element of sticker shock when people go to fill up their tank or go to the grocery store. Lower and middle income households are already having to make choices about what to buy because they're having to pay so much more for food and energy. Solid demand for labor has shifted bargaining power towards workers, putting upward pressure on wages, which could feed into broader price gains. Annual wage growth was 6% in March, the fastest pace since records began in 1997. According to the Federal Reserve Bank of Atlanta's wage tracker. Still, wages for most are growing too slowly to offset inflation. This could push workers to demand higher wages, creating a feedback loop that puts upward pressure on inflation. And put another way, here's the two emotions of Will Smith. When you get a 5% raise, but remember inflation is 7.9%. So watch what happens with gold. So what happened today? There actually was a little bit of a move in gold. It's at its 30-day high. And if you pull back a year outside of the 2-month ago spike with the beginning of the Ukraine conflict, gold is really sitting at a 1-year high. So it looks to me that gold and other commodities are on the move. Gold is more stable than other assets. I think lumber has been up and actually down. So there's been some demand destruction in lumber prices as either housing starts could be slowing down due to pending interest rate hikes, or do-it-yourself home building projects are just being squeezed out by increases in people's food and gasoline budgets. And gold is a different type of commodity than, say, wheat or oil or lumber. So the gold spot price is more stable than other assets. Gold coin prices are another matter, and they are subject to some supply disruptions, but the above ground stock of gold makes it much more stable in terms of that has a long shelf life, thousands of years shelf life. So it's different than other commodities. So I think it's going to be moving. I think it's worth watching. If you're stacking, keep stacking. So I'm adding a 1/10 ounce gold eagle to my tube each and every month. So here in 2022, here is my March contribution. So January, February, March. If you ever wondered about the trade-offs between buying a fractional 1/10 ounce gold coin each month or saving to buy a full ounce coin once a year, I've looked into this and I've got the receipts. To find out more, please watch our featured video.